Okay, hi there, traders. Now, just give me a thumbs up if I could spit it out. Thumbs, I was going to say with an F. The thumbs up if you can hear me okay. And we'll see who's in today. Bit of fun in the markets at the moment. Pete, g'day mate, how are you? So big flush on the open, it looks like. ASX fall back from down nearly 100 points to break even again. Um, yeah, big flush. I think we'll talk about that more in a minute. Um, and it's interesting just because it happening on a Friday, it was very strange kind of sell off. I think out of Gino, he's back. So big. It was kind of weird for me. I thought it was quite weird on the Friday afternoon when people big sell off. I think it was just that fear of, and again the news will pump out anything that's going to just give this market a bit of a kick in the pants. Um, and it just goes to show the way we reacted. Everyone reacted basically was people are still on edge, and it doesn't matter how good the outlook is if you've got profits sitting there and you're doing well, yeah, it goes from a trading game to a psychology game. Um, when you're sitting there and you've got, I don't know, you're loaded to the hilt, long type of thing. They could all be in the green. No one wants to give back anything, and good, bad, or ugly. It looked like that was just a bit of a trigger to flush some people out. It'd be interesting to see how the US goes tonight. Um, with regards, and it's whatever you read in the news. I've read different headlines. I think it was more the sell-off was just a bit of fear about hedge, hedge funds and short positions and squeezes and all that sort of rubbish. So, um, like it was something new, created by Twitter. Twitter have been doing that for years. There's pump groups everywhere, um, all that sort of stuff. So we'll get into that in just a moment. But for starters, welcome to Trade Setup, the live stream. It is Monday the 1st of Feb. So new month, probably bit of unwinding, I'd say, unwind, repositioning maybe, or portfolios on Friday as well. End of the month, rebalancing, all that type of stuff. I think currencies were doing it, playing around a bit. So maybe it's back to business with the start of the new month. Another rally, but we'll see how that goes. Um, Anyone that's new, welcome aboard. It'd be great if you could leave us a like at the end of the video if you enjoy what you hear. And if you don't, too bad. This is the best I can do. But just remember, we've got general advice only. Okay. So, for anyone that doesn't know, I'll be doing I think I'm back on talking. Spotty's back up and running, and that'll be on Wednesday. And they're doing really well. I mean, Spotty, it's a good little show. I mean, guy doing really well. So Elio, his name is, sorry, who runs it, doing a great job. So we're back on there talking on Wednesday. I think it is the third. Yeah, so Wednesday, I'm pretty sure. So that'll be around, I think it's 12 o'clock. So you just jump onto the website and then just check out. You can download it, be live. You can put in some questions. You can email questions in, regarding stocks generally, but I don't think they mind too much if you're talking about different things, maybe the Aussie, a couple of currencies, US dollar, all that sort of stuff, because it'll probably be geared up towards me with the technical side. So yeah, feel free to jump on there and see how it goes on Wednesday. I'll delete that. We'll get into it now. So there's been some good and bad days, a bit of pressure on the open, which, with people got 2 days to think about it and what happened on Friday, you just know that retail's going to open, and then, from there, it looks like we're making a bit of a squeeze back up again. Some bargain hunters coming back into the market. There's all this talk of a silver short squeeze, I think, and it's the same forum that we're talking about GME. I mean, whether or not they created that GME, I don't know what they call it, GameStop short squeeze, is a different thing. I mean, there's a lot of pros out there there's a lot of pros, pretty much all pros will be looking at things like that. I mean, that's the way I base my trading around a lot of it. If you're not going with the trend, you're looking for some sort of squeeze. Is the move extended? You just know that. I mean, in an extended move, people are going to be looking at that. And if you're long to the hill, like I said before, you're going to be looking at it. It won't take you much to lock in some gains, and that creates that flow, or the flow in the opposite direction. Now, it's been, like I said, it's been happening for years and years and years, and it's the main tool for a lot of prime traders, a lot of big traders, is just to get that squeeze right. Now, the guys who got it wrong, I wouldn't particularly call them traders. I call them investors, and I think they were just shorting something that's extended, basically on the back of fundamentals. But if you're not going to trade, fine trading on the back of fundamentals. I don't want to be rude about that, but when you're looking at a chart, it doesn't look like it's going down. Why would you go and sell it? I mean, it's kind of trading 101, especially technical trading 101. You want to get on the short side, you want to get on the back side of the move, they call it. For instance, what we're looking at here is this is Dogecoin, by the way. When you're looking at something extended like that, you just don't go and sell it. If you got lucky, if you sold it up here and it rolled over, what if you sold it here? You know, you've sold it a few times before that and you just keep getting squeezed, squeezed, squeezed. On the backside means when it starts to fail to get to the new highs and you start to get these lower highs come into play, then you can go and short it. And you can see if there's enough of a squeeze back down again. Yeah. And so I think that's the difference between trading and what I think that fund got caught out shorting it on the back of fundamentals. Yeah, okay, that's fine to say that it shouldn't be up here. It should be worth $5, not 300. That's great. Problem is the market. If everyone else believes it should be 400, that's where it's going. So you sort of don't fight the flow on that way, and they cost them dearly. Now, obviously, all that squeeze on GME, I think there's a couple. Um, has created that, and I think it's more driven by news headlines, created that worry about hedge funds not having enough liquidity and having to sell up other margin positions because they got stupid shorts. Maybe their shorts are working. It could be as simple as that. And now these guys, I think, are starting to attack silver. I think they're messing with the wrong crowd over in silver. The silver pits. There's a lot of bigger boys there that know exactly what they're doing. That will come in and thump them if they're going to start short. Trying to create a bit of a short squeeze. Now it may work, but I don't think it's going to be anything to do with that Twitter following that they're spruiking at the moment. I think silver itself just actually doesn't look like a bad chart at all. And you've got this kind of spike up we just had in the morning up into resistance, and it's coming back down now. Don't be surprised if you get all this talk about the short squeeze, everyone diving in, buying on the gap. The pros will know that, and they'll start squeezing back out again with a move down, and then decide where it's going to go. Okay, so it's not particularly driven by any. It could be on stocks. I mean, I agree that you get a pump and dump groups, which we call them. Over ASX as well. There's a bunch of guys. I always follow them just to see what they're pushing. Because if it looks good to me, I'll jump in. I don't care if I think it's a pump, because I know that they'll probably be able to pump it. But the fact is, if you're going to follow them, thinking they are being nice to you, they're not. They've got stock. They're loading up, spruik it to their investors, and then go and sell it. And you got the Sachs statement that holding GME short squeezing hedge funds could lead to market crash. I don't think one or two stocks, because I don't think so. I mean, it's kind of, I just think that either they're loaded to the hilt on one stock and they're caught out. They're just loading up on some shorts, which I think, for these guys to lose, they lost big time. And they individually had to close out, and I'm guessing to close out of some other positions. But whether they're big enough to move a whole index in different stocks is another question. I think it could be. The thing is, if they're going to start attacking all these shorts, the market's got to go up, not down. It's kind of, I think it was just that fear driven. And then if you're going to sit there and how do I explain, you're long and you think the market's stretched a bit and you see this sort of news popping up, you're just going to see what happens. And if no one's buying, it has been very thin volume. On the open today, it was thin volume on Friday when the markets were just ticking lower. Because, I mean, if you're watching it, most people are sort of loaded long. And if they're going to get out, they're going to get out. So it's going to squeeze out the short hands, meaning the weak hands. The weak hands, anyone that's bought late is underwater. They're the ones going to go first. Now, anyone that's a solid holder, fundamentally or technically or whatever, they've been in for a while, they're not pressured into getting out. But if the market wants to go higher, it just has to create these squeezes to put people back on the sidelines. It's like there's not an infinite amount of cash apart from the Fed Reserve in the US. There's not an infinite amount of cash that will keep pushing the market and pushing the market. Just keep coming in from the sidelines to keep pushing, pushing, pushing. Markets have to go on the pullback. So if there's 100 traders, for instance, as a round number, 1,000, whatever you want to call it, if everyone's loaded long and they use up their cash to go long, where's the market going to go? It can't really go anywhere, can it? So it has to sort of squeeze some people out. People have to be triggered into taking some profits off the table, back on the sidelines, ready to go again. and ready to jump back in potentially. Some people get it wrong. Some people hold in. Some people get on, buy the high, sell the short. It's just the nature of the beast. But I don't think I think there's a lot of talk. It's good to talk about these sorts of things with Goldman Sachs that and saying, yeah, with short squeezing of hedge funds. Problem is they're big. I mean, we're talking about GME. It could be that they all loaded into a stock that no one was really watching too much, apart from one shorter, and there was enough of them to push them out. Fine, but to push out across the board, how much money these guys got in their back pocket? Probably a lot. If they got out of it, I mean, don't forget, there's a lot of them probably still in GME, so there's going to be a chance that they get squeezed out. There's going to be a long squeeze and reverse on them. I mean, look at this. Look at this chart here. That's there. It gapped up here, pretty much went sideways. I think this was another gap up, when they sort of got this gap, and that was probably the squeeze. You've got a bit of a short squeeze in here. Some of the previous shorts have been squeezed out, and again here, the market got smashed down here, and then it gaps up again. But this, to me, is looking potentially more like a lower high coming in, meaning that there is some players now, some bigger boys coming in, potentially shorting it and shorting it on the backside, maybe, or shorting it intraday. But they know exactly where their risk is, whereas I think the original short really didn't think too much about risk, just thought it's overextended. Should be valued at $5. It's now at what, $100. Yeah, it's well overvalued, and it just got squeezed out because it was on a smaller stock. Um, but this kind of thing, you can go and check on stocks. It happens intraday all the time. Not potentially funds. Yeah, sure. Yeah. Look, it could be. It's interesting. I think it was just a lot of newspaper talk, and it's something they could talk about because there's like hindsight traders. I would have done this, I would have done that. I mean, they're saying, oh, look, that's because of the short squeeze, how much fear's in the market, and they just drove a few people for that. That was on Thursday, say, bit of a pullback, and on Friday, was it Thursday or the day before? Anyway, on Friday, another sell-off in the US, purely because a lot of other people were just watching it, going, oh, like, I'm just going to take some profit into the weekend. You never know what's going to happen, da da da. And then I wouldn't be surprised if the US ramps up tonight. Um, It'll be interesting to see how silver goes, because that's what the next target is apparently. Good luck to them, to be honest. So what was I talking about? So I don't think GME is. Look at Tesla. Tesla's a better short squeeze. I don't. Like I said, potentially I think GME, they've got lucky around here. I mean, I didn't know anything about it until it hit the headlines when it was trading here and here. Um, and there's all this big talk of a short squeeze and how they shouldn't be able to short and all this sort of rubbish. Um, Sorry, Twitter shouldn't be able to go out. They shouldn't be able to do that. Oh, it's just people getting it wrong, all the big boys getting it wrong and not liking it. So I find it really funny, to be honest. But we've got AMC. No, was AMC was the other one. AMC was the other one they were talking about. A bit of a squeeze here. Look at that. I mean, for me, if you're looking at just this price action, why on earth you're going short technically is ridiculous. That's a pure long to me. Um, I wouldn't say ridiculous, but I just want to look at that action. If you're looking at this action, it's going high, it's sitting on the MA, it's got bought up. It's got bought up here. Where's my volume? Um, and then here, so that's when it's gapping up. And this is what happens when you short it and you're on the front side. If you're shorting against the prevailing trend, and look, when you're intraday trading, anyone that's intraday traded quite a bit will know this. I mean, it's just that antsiness when you see something that's overextended. How are you to say that it's extended? It could extend more. The market will tell you when it's extended, when it's had enough. It will run out of steam, but you don't try to guess it. And that's what I think they've done in GME on the shorts and AMC on the shorts as well. There's no reason to sell this. They might be saying, yeah, look, it's trading at $3. It should be down at $1 or 50 cents. Fine. But who are you to say when it's going to roll? Okay, and the US tend to do it a lot. They will squeeze a lot harder than you ever expected intraday, and that's what there was. That saying is trade the backside, not the front side. The front side of the move, you never know what it's going to. The backside, at least you've got something to work your risk off. And that's the most important thing. If you're going to short, you're going to know exactly where you're wrong. And if you're shorting, trying to pick a high, you don't know where your risk is at all. If you just keep going, and then you might load up again here, and then all of a sudden, you've got this candle that completely smashes you. All right, but here, for me on AMC, there's no reason to go short. And probably if you look at GME as well. I mean, shorting in here, that's fine. If you're holding it, good on you. But you got to know when you're wrong, and it's sitting back on the MA. So to me, that's just your stock standard. Okay, it's extended, it's back to the MAs, and we start to get supported again off the MAs. So why would you be holding it that short when it continues to go up? You'd be locking away a quick gain, even if it's smaller than what you expected. Who cares? You can always go short again, and then shorten as things like that. That's what the pros really would have been doing, intraday, not really holding it when it's going up here, because that to me, you're on the wrong side. There's nothing in this action here up until, I'll just say, up until that candle where you should be short. Okay, and unfortunately, if you're thinking, oh, if it breaks that high, I'm out. The problem is it did break the high, you got absolutely poleaxed. It just ran up really hard, and you got gapped up, went sideways, you gapped up again. So enough's enough. A lot of these guys, if you're short, enough's enough. You call it a day, close it out. So but yeah, there's nothing there. So if you're what we're talking about trading the backside here is more of a prime area, and potentially for me, if I'm trading just off this chart here for 30-minute chart, there would have been, and I wouldn't be holding something like this into the close overnight, considering the gappiness that's a technical term, by the way, that it's been displaying. If you're holding here short, again, in this action here, you've got uh, lower highs. So really, more than anything, there was no real reason to short here. Maybe on a really small time frame, then you've got your wrist tight and you've been stopped out prior to the close, or you've taken a small profit. Here, nothing really, potentially shorting it, around this zone as it starts to break down, but making sure like I said, I wouldn't want to be holding something overnight, a short position. I just don't like doing that intraday, especially on stocks, because they generally do go one way. Okay, they go up. In this day here, once you're working off this lower high, so you've got a few things. You've got a nice lower high, and you've got another, I can draw that in, another lower high come to play. Okay, so you're working, you know where your risk is. You know that it's gapped up, sold off in the open. Buyers are starting to push it again within the same session, and it started to sell off again. So you could easily work in short somewhere in here. Okay, working short here with your risk above or above the candle, however you want to trade it, and then you've got a nice little short on your cards there. I wouldn't be going gun ho, going all day back down to zero. Or you can hold a partial position, because if this thing gaps up again today and we're back up at 474, then you've just been blasted out of the water again, and all that little profit there, if you held a small position overnight, could be given back to the market. So it's all about risk reward. And for me, the way everyone's talking about this, I would be shorting, you can short it intraday, because you know that there's probably a lot of juice on the downside. And I just think that it will eventually come back down and grind its way back down, because the more pressure it's put on this, the more of these retail investors that are all gun ho, let's keep it, hold the positions. They won't hold them. They'll be sneakily saying, yeah, I'm holding forever, and then selling on the side, because it's just human nature. And human nature rules in the end, if you ask me. And that's what the psychology of trading really is about human nature and where you're going to be put under pressure. So I was looking at Tesla too. So I probably got off track, but I think we'll just keep talking about the shorts and what mechanics of, shorting is. So there's a lot of, like I said, coming from a futures background, you're not really focused on fundamentals at all of when you're trading indices, especially. And anyone that's in our room will know that. You've got to know where your risk is, because if you're wrong, you're wrong. You never know really when it's going to be a trend day. If you're shorting, it's a trend up, then you're going to get squeezed. You don't just hold it. Same on the down day. You don't, buy it thinking, I'll just hold until it comes back. Because I think if that's the start of a big smacking, then you've got to load up to the hill, or you've got to be able to keep funding a position, which I don't think is the best strategy at all. Because longer term, it only takes one smashing and then you're out. You've lost a hell of a lot. That's when we talk margin positions anyway. But when you're, like I said, so coming from a intraday index trading or futures trading background, me personally, I'm looking to trade off short off lower highs and long off high lows. For me, those high lows, lower highs are confirmation of that trend of something breaking down. And there's a few other factors. If the market's stretched into a level without really a pullback, you're just looking, that people are going to take profits sooner or later, and you're trying to time that profit taking, and you're not trying to guess that it's going down or hold it for the big move. You're trying to get, from there, if you get in and it starts to come down, you're just managing your risk on the way down. As soon as it breaks that most recent lower high, bang, you're out. You don't muck around, especially in, like I said, in shares. If you're shorting into the share market, you're trading some short positions on. That's not what I wanted to show you. It's a daily. I marked it up, and I don't remember where I marked it up. So it's sort of in here. There's people thinking they're short in here. It's coming down. So at that time, I think they were all talking about Tesla being well overbought. It's fundamentally shouldn't be that high. I don't care how high it should be or shouldn't be. If people love it, there's a lot of people that get a bit of a stocks get a bit of a following. We all know that. Like Tesla, for instance, maybe I don't know what they're doing. I don't even know their fundamentals, but who am I to say that what's in the pipeline, um, what they're going to do, or who's going to believe that it's going to the moon, type of thing. But all I can trade for me is purely the price action and what's happening. If I think it's going to go short, fundamentally it shouldn't be up here, and their balance sheet's rubbish, a lot of debt, all that sort of stuff. Fine, that's great. But I just would not be shorting the spikes like that. I'd be shorting off lower highs, and I'm going to want to know exactly where my risk is when I'm long. So this happened time and time again. Overextended, shorts piled in, squeeze back out, overextended, shorts come in off your lower highs. That's great, and that's it. At least if people were trading that, if people were trading that short, at least they knew exactly where their risk is. If you're trading into that spike, to me, if you're that kind of trader, you've done it many, many times before. You saw that as a spike, that as a spike, that as a spike, and you've just loaded up to the hilt. You've double up, double up, double up until bang, you squeeze right out. You probably got it right eventually, but you couldn't trade it correctly. So you've got to know where your risk is if you're in a short. You're against it. It's quite obvious now, but even in this action, you're going against the trend for sure. Even in here, you could be shorting it here. That's fine because you've got an extension there. You've got a really extension. You can see momentum starting to roll. The second time, got a bit of divergence there. If that's what you look at, stochastic's got some divergence. So that secondary move up, what we'll see on this, I'll draw that up. This high back into sort of that overextended mark correlates to that. A bit of divergence there. Market starting to roll. Then it's starting to kick in. It can't get up to this previous high. You've got a lower high coming to play. You know that the lower high is going to start pressure because as soon as that comes in, you know that anyone that's bought it here is going to be straight under pressure. So they might have weathered that storm there. And as it comes back up and fails, you've got this different levels of buyers. The highest ones under the most pressure, and it works its way down. So as you work your way down the levels, there's less and less pressure, or you get into less and less losses they have to worry about, and you get into some people that are holding gains. But either way, what it does is creates sellers to come into the market, and especially when you're in an extended move, you've sort of used up all the buying fuel, and everyone's loaded that wants to be in the market, is long that wants to be into the market, and then people will start to thinking about gains or losses, having a lock in a small loss, a bigger loss, and so on. And so you're just flipping over that fuel, and everyone that's all that fuel that's long, you're starting up the top and working your way backwards and putting pressure on more and more people as the market works its way down. And that's what you're ideally looking for when you're trying to go short. You're trying to see where they're going to start to unwind, and you're not just going to sell into a spike because that's for me that's kind of an arrogant way to trade because you're thinking I'm so good that I know exactly where that high is going to be, which really is ridiculous. If you've been trading long enough, it's not a winning strategy at all. So to sell off a lower high to me is a lot better. And then and also I talk about anchors a lot. Anchor to the uptrend. Say the anchor's in here to that uptrend. You've got flush up, pull back, buyer started to step in, pressed it back up, lower high. As soon as it breaks that anchor, you can sell off that high, but there's nothing to say. You've just got to be careful that if the market starts to consolidate those highs and starts to do something like this and lift again, then you're going to get squeezed back out. So it's a kind of a high risk, high reward strategy. When it breaks the anchor, it's lower risk, but again, it's lower reward because some of the moves already underway. And it worked out okay here. You start to get that couple of red candles. You might sell somewhere in here on the break with your risk just above or above this lower high here, but you've broken the anchor. A lot of these shorts, we're starting to squeeze them out. How deep is that correction going to be? We don't know, but that's what we're in to find out. We're short to find out exactly how deep this correction is going to be. Okay, then it started to fail. You might have held it through here, started to fail here. Okay, your stops really should have been, if you haven't taken some profits along the way, should have been a break at that level there, okay, because then it's just a flip and reverse. We don't know how high it's going to go. Is that the start of a new trend? Okay, so you can see that short squeezes happen all the time. Shorts will load in, thinking it's overextended, and turn around and get squeezed back out again. The same on the short side. Shorts will jump in and they get squeezed out when the market flips and reverses. But all it really is, it's trading 101, and how the market will drive in a certain direction. So, and if you can think of it like that, there's only a certain amount of people, if you're watching, whether it's GME, Netflix, or whatever it is, a certain amount of people that want to be in it, into it. It's not infinite. So if it's infinite, yeah, things will never go down, never go up. It's just going to keep going in the same direction forever because we're always supported by buyers. Away we go. But everything, one stock, index, there's always an infinite amount of people at that time of, at that point in time that are looking at it, thinking it's going up, or everyone's got their different ideas. I think it's going up. You think it's going down. We're fighting it out. If there's more on my side, it's going up. If there's more on your side, you're right, it's going down. But once you've used up that juice or the fuel, the market will pause, and that's when you know you'll flip. Does that make sense? I hope that's making sense. But that's where once it's used up the fuel to go in a certain direction, that's when you might get the opportunity in the opposite direction to squeeze them back out, whether it's long or short. And all you're trying to do is fine tune your trading and picking those areas. Okay, so yeah, I think I just got no, that's not. So there was a day, we won't talk about it now, but we'll get into some shares if you want. But there was a day when the market was going down, I was buying the whole time and was profitable. Um, that was on the Hang Seng. I think there's a few others in the forum that were going short, which is great. They did pretty well, but for some reason, um, I was going long and still managed to make some money. I think I actually only had 4 trades and they were all winners, but very small because I knew that I was on the wrong side of the market, especially by the end. But what I was doing, because I'd sort of missed that move down, I was just trying to pick bottoms. But I know what I'm looking for. And again, that is that strategy of just going off the high lows. I'll just see if I can get that up. But put in some stocks if you want to look at some shares or anything that you want to look at, chuck it in now before I keep ranting, and then we'll go on about it. So I'm going to get to now I can't remember where it was, but anyway, I think it was on this day here, or one of these days just in here when I was shorting basically. Hang Seng's starting to rally now, so there's a bit of a squeeze on the Hang Seng. Bottom picker, that's exactly right. What's the old Chinese proverb? Man who picks bottoms gets stinky finger. Not the best proverb, but anyway. Yep, indices. Let's have a look at that then. All right, let's just get into that. What chart? Let's work our way down. So if I was thinking about a long here, I'll be just working my way down from shorts to yeah, BRN. We just got stopped out of that. So my view is I'm a bit miffed about it. Like I said, I don't like being wrong. If I'll take my stops. Don't worry about that. But generally, after being stopped out, it's a little tanty, and then you're back into it. Get it off your chest and back into it. So you're looking at potentially long on the DAX. So the DAX, you can see it's struggling up at these highs. It's touched, but it just doesn't mean it can't go through it. Longer term, or on the daily anyway, it's pulled back. It's still in an uptrend. So we're looking at this move up here with MAs across. So that's how I'm basically defining my uptrend, downtrend. Yeah, true, Pete. I think we had it a while ago, did well. And then the second time, just when I touched it, then it's just dropped. And that was, I think, I was just caught in the wrong side. I think it's actually, on the daily, there's no reason why I shouldn't have got in that trade on BRN. It's just, we're caught with this shorting rubbish. Don't want to call it rubbish, but that short squeeze rubbish with the hedge funds and, the little man taking on the big man, which could be the truth, but we'll see. So back to the DAX, the way I'll be looking at this, I'm going, okay, we've got an uptrend. we've got a bit of a pullback now. That pullback off the highs is a bit deeper than what we've seen before in this uptrend. And talking about that, that, um, and where we are at the moment. Not that this pullback is finished yet. It's still, and you'll be dropping it down to the lower time frame charts. Uh, it's still under pressure. So I can spit that out. So, but on the daily, this is a pullback on the daily. So what we're looking for is potentially a level intraday that might be. Let's take that off. I don't know. We might find a bit of buying action. We've got some buying into that zone before. We are up off that zone. MAs for me are rolling over on the daily. So look, this could get another flush lower today, but we want to see evidence of buyers stepping in. So really dropping it down some time frames. We'll go to the hourly. We've got this low in place. Okay, that was a night. Was that a sell off? 7 o'clock. Okay, so that was a session, big sell off, and then ramp straight back up that same session. Okay, then we've got gap down, fell into that zone. But this action here, for me, it's not as strong for them sellers as it was before. This selling here down, lower high, but a lower high at the bottom end of that range, as in the bottom third of this move down. When it pulls back only a third of the move, that's strength in that move, as in, this move was down, pulled back roughly a third. That's kind of strength. There's still some selling to come. Got smashed back down again. The way it's ramped straight back up, took out that anchor to the downtrend, it makes me think there's a good potential zone off here to go long. But we'll just have to see how the US goes and what happens on the open. Expect some flushes because you know that people are going to wake up. Your general retail, maybe the pros are looking at that zone and go, okay, if this holds, we're going to start a squeeze on some shorts. Shorts that have built up the last few days, especially built up on Friday. See if we can squeeze them back out and get a little run up. That's what they'll be looking for. But even though the trend on this 1 hourly is down, see what happens in the 30 minutes. See if it looks like it's running out of steam a bit. Yeah, look, this move here, the way it was chopping around here and sold off into the close, a bit like the SPY. The SPY did that. This is a 5-minute chart. That's where we were in the morning. You know that the market's going to flush in the open because the retail will be, the ASX, and all the SPY has to do is head down. Everyone's looking at it, especially your retail, go, oh, look, another sell-off. We're going to end up down 100 points today. They get squeezed and then bang, straight back up again. Once they've done their damage on the open and it's lifted. So once they're all squeezed out, all that selling pressure is finished, it's rebounded. So if that's the same as what we could be seeing on the DAX, I'll be looking at this level. Now, if it just bumps up from here, two things. We have a good rally, look for your first pullback. Pullback, got to have a higher low and then potentially go long. And then that might be, if we do, something like this, open up strong, grind down, look for the grind down, and then there's potentially a long in that off a higher low, but it has to be off a higher low. You don't want to see retesting again because we could get lower highs pressure in and we just sell off again. Or look for sort of that flush. If we get that flush in the savage kind of a bounce, then I'll be looking for that squeeze. Okay, back up again, but off this level. All right, if we start to plow through that level too much, plow through it, and then you start to grind back up. So when I say grind, I think if that's been a solid move up, a strong move up means that there's no one in the way. Okay, in the fact that it's being able to go up hard means there's no real sellers in the way. But when you start coming back down again, it's sort of a grind down, means a minor lower high. It means that buyers are stepping in and averaging down potentially. So if there's some sellers and there's enough sellers in there for that secondary leg up, and that's what you'd be looking for. And that's where you get this sort of expansion back up again. Because what these sellers through here that have been jumping in realize they're wrong, bang, they exit, buyers hit them up again, as in hit the offer again, and up we go. So if we get something on the downside, it's just the reverse of that. If we get something breaking through quite savage, well, I won't do that. I'll just do it over here. We get through that support quite hard, and then you get a bit of a grind up like that. It's the same sort of thing. Okay, it's when buyers are buying it up because they think this is just a flush and they're going for a good squeeze, and then they start to realize they're wrong. And there's more selling pressure than buying pressure. So that's the kind of scenarios I'll be looking at around this level, just around the open. So I think it's going to be quite interesting. So one, you just want to see if it flushes and we hold higher lows, because once we flush and hold, then there's a chance that people who are waiting will start to dive in bargain hunting. Anyone that's been short in here starts to realise they're wrong. And the same scenario, a good spike up on the open with a grind lower. I think there'll be a few sellers that will start to realise they're on the wrong side and look for a squeeze up. This is the only scenario. If we jam lower, grind back up into this zone, then deep enough move down, and we grind back up, I'll be looking for that selling pressure to continue. All right, so that'd be my view on that, Gemini, but we'll see. So it was worth looking at that tomorrow anyway. But we'll be to see what happens. So let's go over to ADV. Whoop. Let's go here. 24 now. So it's a bit of a reverse of what happened on Friday. Friday gapped up on the open and sold off all day. So with any chance, we're going to just keep grinding up, which is looking like the case at the moment. So luckily enough, I only took one stop out of seven stocks, which was BRN. Bloody thing. All right, so ADV. ADV, I wouldn't mind. So what I'm looking at, we sort of gone from oversold to overbought, and last time it was in the overbought territory was up here. I'll just go. So I'm just getting up my drawing tool so I can scribble on this. ADV. So you sort of got, this high in conjunction with this high, well, potentially these in conjunction. You've got a lower high in here. So what I look at, if you don't know, you're new to my ramblings, what I'm looking at the stochastics for is just buying and selling pressure. Buyers run out of pressure when it's overbought, sellers run out of pressure when it's oversold. Sometimes you can just stick around there and we get this move down, like we've got just constant move down. But then when you start to get selling pressure like this, it's come up. Okay, we've got this high, we've got a pullback. This was supported with, in here, a higher low. We've got a higher high, but it's, to me, that's weaker pressure from the buyers, and it means there's more pressure increasing from the sellers. So I wouldn't be surprised if we get a lower high coming here, and we don't quite get up to 3, and we start to fade after that because of this action here. We've broken down. I'll just take that off. We've broken down. We've had this uptrend start to fail. We've got this uptrend here. We may need to come down and retest. Who knows? But if we just continue on up from here, fine. I'm wrong. So at the moment, there is an uptrend here. It's intact. We're on the MAs. If I was going to go long, I wouldn't mind seeing. I'm just drawing this up here. That pullback. I wouldn't mind seeing sort of an inside level that I can work off because I don't want to take too much risk. Just to, that little pullback just means that, okay, if we pop up, we get that minor pullback, we hold the MAs again. To me, it just means that there is some more buying strength, and I'm happy to buy that inside level. I like these kind of setups. That inside level, it goes. I wouldn't really want to buy this kind of move and buy that high, which is up here at 3, with this kind of risk on. I just think that's too much for me, especially when I'm potentially, if it gets up there and I buy on stop and I got my risk below, it could just be a flush of that level and then we roll over. Okay, so that's what I'd be looking at on ADV. What's the next one you got there? VOT. These are all old names. Yeah, I think this is a nice, well-established uptrend at the moment. It's fared pretty well. Today, it's done 0 at the moment. I've got all my chart. Halt, okay. What are they halting over? Capital raising. Okay, so maybe some decent news. Good luck with that one. We'll see how that goes on the raise. But either way, look, it's heading higher. The weekly's been grinding higher. It's just maybe, you get to this sort of extended, when it's overextended on the MAs, you just need people to get flushed out. What you can get, a lot of the times, you can get this selling pressure come in like this, for instance, it comes all the way back down. You get to the oversold territory and you're at a higher level. So that's essentially what you're looking at around 15. If it holds around 15, starts to rise. If you're not long, you could get long, but you want to see it get through 7.5 and start to attack up towards 25. If it doesn't get through 7.5, you start to roll, then you just got to take your stop and wear it. TSO, a bit of sideways action at the moment. This level will need to hold around 25, and then essentially I'll be looking for that high low to hold. That's not what I want. Where's my little man? Here we go. So we've had a good uptrend here. That was an extended move with no pullback really. This was a good, decent pullback. So we've had sort of these moves, decent pullback. Okay, so really what you're looking at is to see if this zone through here can hold. If it doesn't, sellers are winning out, and all this was on the back of, I don't know, whatever reason. And sellers do not want to, buyers don't want to hold. They're up for that pressure, and the market could head back down and retest this level at 15 and go lower and restart. Okay, so really I would want to see this zone hold. We've come up, pressured down, tried to go again. Sellers were coming in. This whole time the sellers have been coming in, capping any rallies. But at the same time, we've sort of flushed here. Buyers have been holding it, and you'll want to see them hold again. If we can't hold this level, I think it's going to extend down to 15. If we hold this level, what you'd be looking at is, whoops, I'll draw a straight line if I can. This action here, you want to see it's pressing down to there. Just change colors. I don't mind if it flushes down, but I want to see that reclaim pretty quickly. If it's in the same session, good. In next day, is good as well, but a couple of days down, it might be a bit of a struggle. But I want to see that hold, and I want to see that retested before we start to get some higher lows lift, and then looking for the entry off a higher low. Ideally, after this level breaks, if you can get, say here, something like that, if it breaks that level or retests it, pulls back, gets a higher low, then you're sort of front running that break. Okay, but at the moment, to me, it's rangy, potentially swaying on and heading south. The good thing is we're sort of heading back to this oversold territory. So whether or not the sellers are running out of steam in here, like they have previously, and we're going to get supported at this 25 zone, is it's a bit too early just yet, but potentially. TSO, so who's next? We got BRN. I got flushed out of it. It doesn't mean I'm right. That makes sense. This zone in here is coming off a lower high. Let's just increase that 6 months. Okay, so and again, there we go. And the one thing that I wasn't prepared to take too much risk on this, but if you're a firm believer in it, that was a trend up. To me, that's broken at the moment. It's in a contractive mode. Potentially, this happened before Friday's sell-off anyway, and that's why I didn't bother with the. I'm happy to leave that stop in there. I'm not going to take the stop off and wait for a pullback to sell. It's always good when the markets are falling against you, and then you sort of say, okay, that's it. I want to get out. It's going to wait for the bounce. I'm going to get out, because when it bounces, you guarantee you probably won't get out. You'll be waiting for a better price until, sure enough, you get hammered again. And that secondary move down off a lower high will be harder than this move down that we've just seen here. So there you go. That anchor's not quite broken. If you're looking at it that way, you've got highs up here, lower high coming to play. To me, the anchor's to the uptrends here. We could chop around here. We might still hold. We're coming into that 50 area where it's hold. It's just above there now. We're at 51.5, 52. We were stopped at 51. There's a good chance that's the low. Market goes up from here, but I won't be re-entering it purely because this move up there. So when you see that kind of move and it's broken, so the market, your Dow theory, higher highs, higher lows, until the market starts to break down. Okay, and then we go into that contractive mode here when we don't know where it's going to. That's the kind of thing. And then we start working off these, attacking these longs, squeezing them out, and it's all part of a bigger move. So that's your weekly, that's your pullback in your weekly, and then we start to rally again. On the weekly, we start to rally. Okay, so that's, to me, your daily high lows. In your weekly trend, it's all one move. Weekly pullback is a corrective move on your daily, and then you're sort of looking at it to come out of that daily move off a higher low and to rally again. So really, it's early days at the moment. If we chop around here, we might head lower. We might do this. We might just, if I just get rid of all that, we might just be falling into this 50 zone, flush it out, reclaim it, hold it, off we go again. Who knows? Okay, so to me, I took my stop. If we get something that looks good again, I'm happy to jump back in because I think we took not a hefty stop, but in dollar terms, yeah. But if it's quite low risk next time and the risk rewards there, then this thing could be back up at a dollar quite easily, and you got sort of 40% rally on your hands for taking. Yeah, we took one on the chin there, but it doesn't mean that it can't kick off yet. I just don't like this. Could be all part of a. If we go back to a weekly chart, all part of a lower high. So really, this weekly, we've just this 50 zone to me has to hold up. I think probably got some work to do. Look at that on the weekly too. Move up, run out of steam and overbought. Buyers run out of steam at a lower price, 70. So what you do when we start to run out of steam at a lower price, anyone that's been holding through all this, thinking twice. Anyone that's been buying off that level at 30 will be worried. So no one's, I wouldn't suspect there's going to be enough buyers to start pushing it straight up through 70, but there might be someone building a position that's happy to just to buy and support those pullbacks. But we'll see how that goes. Still early days. I think the last couple of days have sort of kicked it in the teeth a bit, but we'll see. AVBRN, PAR, genome. Yeah, that's daily's on the way down. Look at the weekly. Thing is, with the weekly, you need really, and it's at a zone there. You can see, clearly, just looking at the weekly, where if you, so I'm always approaching this from a new entry. If it's something that I'm not in, I'm approaching it from a new entry. So I'm just having a sip of cold coffee. We've got this zone through here. You can say it's down to $2 even. But yeah, we've got a zone there, and you can see good extension up, big sell off. The market's sort of recovered, but it looks like it wants to lift off, say 220 to 225. Okay, and we've got this in play at the moment. So we've got that, a major contractive kind of a move. So whether this is going to go through and this lower high is going to pressure markets down, or whether we're going to continue to find some buying. At the moment, even the weekly's not looking too crash hot. The good thing is it's taken a lot of energy to move it from sort of overbought up here to oversold. Last time I oversold, same level. We lifted off that level. Last time I oversold before that, we're down here. Okay, so to me, every time it goes to oversold and you're at a high level, you're looking for people, you're looking for the price action to get soaked up at a high level. Okay, the problem is there's been a lot of volume come out of it, so you want to start to see a bit of a lift in volume. And volume start to accumulate. We want to see those extensions up with some good volume. You don't really want to see another pullback all the way down to here. So to get in on the new trade, I'll be looking at this zone, fine. I'll be flicking it down to the daily to see what the daily's saying. And at the moment, the daily's not saying anything because it's below the MAs. It's just we're sort of hovering around that 225 zone. So really, it's a wait and see kind of a trade for now. If we start to get a push back up and you want to see it react off the MAs, as in the average amount of people are buying it, MAs start to lift. And then what I'd like to do is really just look for those pullbacks, when we go back down to oversold and see if we're at a higher level. For instance, this one here, back down to oversold at a higher level than this previously when we're oversold territory, and you can start to work off that prime entry there. You know that, okay, we're starting to hold up at an inside level at 150 through here. You can see through here, high, low in here. Okay, go long. It worked out well. Just trying to think of another example. In here, prime example. That's what you want when the market's heading higher, got a good flush lower, starts to hold that support, little extension up, because what that is, that extension up is like your first new traders or very aggressive. It pops up. It doesn't mean that they got it right. You've got to remember that. Just because you got big bucks doesn't mean you're right all the time. Right? everyone's wrong. Everyone's wrong in trading. It's just how many times you're wrong compared to others. So when you get that sort of a pullback, because it's early days, you get that pullback starts to hold again. You know that it's starting to get defenders. Other people stepping in at a higher level. They're not waiting for it to get back down to here. At this support through here, it's popped up above the MAs, pull back to the MAs, and it starts to lift again. Then you're just doing a buy the break. You know exactly where your risk is, and you're looking for that, to manage your risk on the way up. And as it played out, it didn't go too far before we got smashed, but you get the drift, I guess. Nice little high low just in here as well, if you can see on the left-hand side of the chart. So I just realized that the right-hand side was hard to see the whole time. I hope they didn't change anything there. All right. What was there? That was PAR. Whatever else we got? SOR. Many good entry on SOR at the moment. Not particularly for me. I haven't seen any areas where I expect to find some sort of support. It's on the MAs now on the daily, but we're coming off a well and truly extended. So that's an extended move on the weekly, obviously. Went from 15 to 95. I don't know, 400, 500, 600%, something stupid like that. Really went hard. I mean, you look at it at a weekly chart, I wouldn't be buying in here because we got that first really rejection of 95 all the way back down the first week. The next week it tried, comes straight back down again. So if you flick it to the daily, we've got a lower high in play. Yeah, it's taken out this low at 60. We don't know where it's going to. So at the moment, it's heading south. We're coming off that lower high. There's still quite a bit of juice to get squeezed out of that action. Potentially, I mean, this is all, well, what would you say, conjecture? I'm not saying everyone's going to get squeezed out, but there is that probability where they could get squeezed out. We get that pullback. But really what you're looking for from here is just where's it going to? All right, potentially down to 40, maybe 45, 50, which is not far off then if that's the case. But I'll be looking for something on a couple of down days. I want to see buyers start to soak it up, and I don't want to see too much volatility. And I wouldn't mind seeing these stochastics. We just started to get momentum rolling over. So when momentum rolls over, it means that people are watching it. People are starting to sell, and then buyers might be holding off. So I think for now, for me, it would be a wait and see game. What to look for? What to look for is really I'd be looking for. I mean, I'm a big one for working off areas. You've got to work off an area. Where it could be an area. You've got a couple of little zones there, potentially into that zone just below 50. It may extend down, but I want to see if it extends down, rejects quite quickly. I want to see any other attempts to push it down get soaked up. And if they soak it up, it's, if you're a seller and you're watching the market soak up your selling pressure, you're not going to do it for too long, are you? So, and that's pretty much what the market is doing. If it's starting to soak it up, what they're doing is starting to change the seller's mind. Anyone who's probably under pressure might be willing to hold it for longer. Anyone that's on the sidelines willing to come in, they might be starting to look at it. Look, I'm going to have to enter soon. All these sorts of things, but it changes from a mindset of selling to a mindset of buying. And we're just trying to time that at the moment. It's too early for me. What was that? That was SOR, ELO. ELO's copped it a few times up at this level at $8, and it seems to be. And if you go, the weekly doesn't look like much just here, but I'll just draw it up. And get on to yours, Pete, because IVC, who knows what's happening there? I mean, games afoot on IVC. So you've got this area up here rejected a couple of times. So basically above, what was it, $8, and it failed off there previously. So you got failure here, sort of ran into a bit of steam, bit of head, bit of pressure previously, just below the level, extended into it again, failed. So you got a lot of failure up there. We're a bit below that now. But the problem is it's on everyone's mind when we get up there, what's going to happen? All right, so when you've got this kind of uptrend on the weekly, and we start to get in that zone, if you're long here, you'd be looking at what happens at up towards 8 or even earlier. And if you start to get some weakness coming early, you might be tempted to take some profits off the table. Anyone that bought it late is potentially going to get squeezed out. We might get another push down to retest this $5 mark. I mean, what we've got previously. Okay, so that's the idea, and that's the weekly. The weekly's not showing us too much. You obviously got a clear level around 650 that needs to hold. If that doesn't hold, we're going to start the process of potentially squeezing these longs out. Okay, so if we go down to a daily and look at we're well and truly extended too on the weekly, over the longer term, and we're falling short of that $8 mark. So you've got to just bear that in mind. Now, when we're looking at the daily, the way it's sort of flushed up here and comes straight back down again, it doesn't leave me to be too confident on it. All right, so if I'm looking to buy this here, I want to see sort of that on the daily chart. I want to see some rejection of lows, potentially like this, what we've got here on this day. I'll draw that right up. I'll look at the 3 months. I want to see some rejection. Maybe that was a bit too far, was it? Yeah, in here, because this is the same sort of thing. You've got this big push up. It's grinding its way back down again. This high low in here. That's what I'd be looking at. I want to see it sit on top of the MAs, buy that break up, $6. You know where your risk is just below, because if it's going to go up and straight back down again, you're wrong. It's as simple as that. So why have a stop too far away? All right. So when it gets up and we start attacking these levels, it gets through. We could be. I think actually we might have had this position then, held it, stopped out here, and it's obviously it's gone on since then, but too bad. But the way we've sort of popped up here and failed back into that zone, this trend up is not convincing, as in it's a real grind to get. So if you buy the break, you might be up for a day or two, and then you take a lot of pressure for the next couple of weeks before it starts to get back in, and you get back in you put on a few gains, and then bang. So what I'm saying is that it pushes through the highs. The way we push through the highs, we don't get too far through the highs, the previous high, before we fail. This rejection here, rejection, fail. Push up through the highs, got a good little push here. Straight away, we rejected back into it again. So it doesn't lead me to believe there's a lot of strength in this market, and especially when we're getting up towards that $8 mark, which we we're just talking about, up towards here. Could fail. There's no reason why it can't fail lower. And if you look at it, we've got a level back here. Potentially, we're flushing off. So not the world's best stock. Massive long-term range between these lows at 5 and up towards 8, 9, 850. Sorry. Could be range bound for the next couple of years. We don't know. Could just go sideways from here, keep flushing up, straight back down again. And range trading, every time you think it's going to get a bit of head of steam and rally, take out the highs, it comes straight back down again. So just be wary of this one here. Last one we'll get on to is IVC. Yeah, obviously I don't. So the weekly is what I was concerned about. We've got that breakout and straight back down, all in the same day. Now, I generally don't like seeing that. I probably would have bailed, and I was actually thinking about. So me personally, I had 2 positions in this one. I was going to bail on the second position, take some gains, and just manage my risk on the second one, but I didn't. I missed it. So that's just a bit too bad. But we've got on the weekly basis. No, I want to go. It's not even showing. It's a bit hard, isn't it? On your weekly basis, we've gone through 12. So 12 is sort of your line in the sand. And it seems to be that now that we've got some strength in the market, obviously it's drifting again. So what you've got is this level through here. It hasn't. You want to see it on a weekly basis, trade above and finish above, not and close above that level. Instead, we failed off it there, failed off it there, failed off it there, and again we failed off it last week, and that was all in one day, up and back below, and we've just started to really pressure 11. We got some buys in here, might still consolidate and lift, but the thing is, it's been up at this zone for quite a while. We'll just have to wait and see. I mean, if it comes back down 11, we're going to get stopped out if we start, chopping around here. But at the moment, I'm trying to see how much of that move, maybe that was a legitimate breakout and people wanted it, but then it started finding that selling pressure as the whole market, the ASX was getting sold across the board on Friday. So whether or not that's just, you can be attributed to that, selling pressure coming through, or whether it is really a legitimate breakdown now, and we failed at those highs. So yeah, that's what I'm looking out for. If it's the case that it was just because everything was getting sold through fear, because fear can drive the market through levels quite easily, and everyone when they're buying, when the market's rational, it respects levels. When it's irrational, it tends to just forget about levels, and everyone wants it out pretty quickly. So the fact that it's bouncing back a bit today is good. I'm willing to leave it a bit more and see if we can get that push back up through 12, and we'll see how we go. So for now, that's it on those. It's looking good. CGC we've got up again today. Can fighting back a bit. It's done nothing, to be honest. IPL is a good one. I think that's still looking really good on a daily basis as well. Looking towards we get a bit of a run on back in the US tonight, a bit of a run on tomorrow, the next couple of days, break back up again, sort of above the 67 and 67.50, then great. If not, we're gonna have to manage that risk as we go down. Yeah, Joseph, I like to be a contrarian. I think it was a bit of a calculated move on Friday because Friday, look at the ASX. Sorry, that's a 1 minute chart. We finished just off this level here at 6,600. I think it's probably, I might just get over to another chart. Let's get over here. Is this it here? All right. So that was today. So what it's done, there was a bit of a, not clear support through here, which is tested. Okay. We drove straight back down into it, reacted back off, and come straight back down into it, just into the close on Friday. So we finished at this zone on Friday, which was this candle, the green candle, which finished the day. So that's a 30-minute chart, by the way. So this green candle reacted back off, it flushed below, just in anticipation of the US, probably a good feeling that the US is going to be down into the close as well. It's going to cop a bit of heat. Now, if it didn't cop any heat on Friday and the US is up, then okay, no harm done. Bang, up we go. The fact that the US was down, they know they can flush that level quite easily because the market's going to open. We're going to be negative. Everyone wants to sell in the open. We sold on the open today and we bounced straight back up above that level. So I'd still be respecting that level a bit and see how we come straight back down into this low here. So the markets will do that, time and time again. It flushes, gets people out, puts them on the sidelines. But this trend, I've got this marked up on the weekly. To me, is still up. The trend is still up. Whether we're going to hold up off this zone today and we chop around here and we lift again is yet to be seen, but we'll see how we go. But it could be a bit of a calculated move. Using Spark, 6 years now, I think. So it's a good platform. Anyway, we'll call it a day there, guys. I might go and finish my cold coffee. So thanks very much for joining me. If there's any more questions or something we missed, just feel free to send an email at support@tradesetup.com.au. And remember, I'll be on Spotty. It's worth watching, not just for me, but they got some good info on there, and it's a really good show. Jump on Spotty, go to the website. I think it's spotty.com.au, and you'll see all the past episodes they've done. And if there's anything you want to talk about, feel free to email them, jump on Facebook, and then put it on. And then there'll be stuff that we can talk about during the session. It only goes for about an hour. I think it's Monday to Wednesday at this stage. But like I said, they're doing quite well. I think they've got some interest out of the US now, so I think the show will grow. But we'll just see how we go. Guys, enjoy, and I'll speak to you again soon. And just remember, if you do like what you hear, it'd be great if you can leave us a like on YouTube and help us spread the word. All right, guys, speak to you again soon. Bye.